Good morning and welcome everyone to the Ultimate Trading webinar for beginners. My name is Danny and I will give you the webinar today, and we can finally begin. And we're going to open the webinar with the introduction to AvaTrade, as I said. So as many of you know, AvaTrade, we are a regulated company. We have 9 licenses worldwide. We operate for nearly 20 years, since 2006. In case you got a question or a query along your journey, our customer services can easily be accessed via the web trader to chat with us or to send us to communicate through the WhatsApp. Otherwise, you can send us direct email to cs@avatrade.com. Now, if you got a question regarding anything related to trading, you can have a senior account manager assigned on your profile to give you full support through the process with no additional charge. The way that it works is you can ask him anything under the trading subject. That means risk money management, analysis, any questions about your calculations, for instance, your strategy, your anything you want, maybe just a bit better understanding about the concept itself. A senior account manager is there to do exactly that. If you don't have a senior account manager yet, you can ask for customer service to assist you with that. Now, we're going to carry on with the web trader as we said. So the web trader we're using is this is the desktop version. The web trader that we're looking at right now is the desktop version, but we also have an app, and it's called the AvaTrade's trading app. I believe it looks quite the same, AvaTrade's trading app. It looks almost the same way. It's just a difference of looking at a phone screen or a computer screen. But the idea is in the features and the services that I'm going to show you today on the computer might as well be accessible on your personal device, on your phone. Okay. Besides that, I'll also like to jot down the other platforms that we have, which is MetaTrader 4. MetaTrader 5, Ava Futures, Ava Options, and Ava Social. Now, a very common question that people has is what's the difference between MT4 and MT5, right? Because everyone wants to know what to put the time and effort and become better with. So there is, to my personal opinion, MT4 and MT5 are quite similar. We can maybe say that MT5 will be more suitable for more aggressive diversification. It's just my personal opinion. Of course, MT4, I find it a little bit more straightforward, but it's again only my personal opinion. Other than that, I don't think that there is so much difference. I also would like to add that both MT4 and MT5 interact with the web trader, which gives you guys the ability to open a position in here and review on MT4 and vice versa. So you can then go to your positions as an example and modify whatever you want in between. Yeah, apart from that, there is no much significant difference. Ava Social and Ava Futures and Ava Options are completely different concept. We're not going to waste our time explaining what is futures and options, but you of course can download and enjoy those amazing apps. But Ava Social is something that I would like to speak a little bit, because what it offers is copy trading, and I find copy trading very helpful for beginners. And since this is a webinar for beginners, it seems appropriate to speak a little bit about that and explain the general idea. So copy trading, the way that it's done is very simple. Let's suppose that we're trader A. As you can see in our balance, we've got $10,000. Okay, and we would like to copy, as an example, Mr. Let's say trader B. Okay, now there will be various reasons for us to want to copy trade. The main idea is automatic trading. That means that when I copy my copy trader B, I link my account to his account, and my account will trade the same way. Now, not always I'm gonna pick a trader that has the exact balance as I do. How can I maintain the same level of performances. First of all, I have to ensure that we have a computable balance. But if we don't, and for instance, we don't have 10,000, but we have $100, okay, or $500, but still we would like to copy Mr. Trader B here, and Trader B has $5,000, okay, as an example. In this case, what Avasocial offers is the ability to customize the lot size. This gives us the ability to copy the strategy with a lower lot size and lower margin demand, margin requirement. This way we can enjoy the same strategy, having a lower balance, but we can make a comparison to the performances. Okay, otherwise you can of course do it the way that fits right. I find it very helpful to do it through this process. Everyone can do what feels right. As an addition, I'll say that Avasocial for itself as an app is free, so I'd recommend everyone to download and explore. All right, so we're gonna, of course, if there are any questions, guys, until this point, any questions about anything that I said, including the Avasocial or anything else that I have explained so far, feel free to let me know. Okay, the question section is right there for you. Okay, we're gonna carry on with ease, speaking a little bit about the menus to the left. We're going to click here on the arrows to fold it down. As you can see, the way that I minimize and maximize the screen is by clicking on the arrows, allowing it to go up and down. Of course, we'll speak about it more thoroughly, how to customize it a little bit more, but at the moment, that's a general idea. To open the order entry, I can click on buy or sell. As you can see, very, very easy. Okay, again, we're going to speak about it later on. No point delay about it too much now. So at the top, at the left upper corner, we there is a question here from Stevenson Felix. Could we have an example how to use MT4 and MT5 with AvaTrade? Thank you. There are dedicated, I'm just answering you, then I'll let the audience know about your question. There are dedicated webinars for MT4 and MT5. Okay, so the question from Mr. Stevenson Felix was if I could show an example how to use an MT4 and MT5. Unfortunately, no, they are dedicated webinars for MT4 and MT5, but at the moment it will be very, very problematic for me to launch MT4 or MT5 for the favor of this demonstration. So we're going to carry on, but I assure you that on our YouTube channel, you're going to find plenty of videos. Okay, so to carry on with ease, what I was about to say is right here at the top left, we've got our personal details. In here, in those three lines, we can make a deposit or make a withdrawal. Underneath, or our personal details, whatever we want to do. In our account, we can even open a sub account and upload documents. This is our personal area right here. In here, we've got the trade. This is where we are. Underneath, we've got positions. Positions, we saw that. At the moment, we've got no positions. Okay, orders, same thing. We can click and modify our orders. In history, we can determine by the range of what dates will be displayed and review it the way that we want. Underneath, we've got signals. Signals is, there are two ways to access the signals. Okay. Let me also show you the other way. As you can see, the signal section is by clicking on the icon in here, and then we've got this nice list. We're going to go from right to left. In here, we see the date that it was produced from the newest to the oldest. So the newest will be at the top. This was recent, and as we go down, it gets older. In here, we can click and view the signal. In here, we can see take profit, then entry price, then stop loss type and symbol. At the moment, in these two cases, crude oil and Brent oil, we don't have the take profit and the stop loss. So we're going to take one that has, and then we're going to see why those doesn't have it. Okay, we also see a message here. We'll speak about it in 20 seconds. So if I'll click, for instance, on let's go with Nasdaq as an example. Click here on View Signal, and then it opens. We've got Take Profit, Entry Price, and Stop Loss. We're going to click here to expand via those two arrows. The next thing I would like to do to see a similar picture is to ensure that the validity of this screen matches the validity of the time frame displayed in here. The way that this can be done is very easily. The validity here is daily, and in here, if we click at the top left, we are on 1 minute, 1 amp for 1 minute. Underneath, we've got hours, underneath days, weeks, and months. So we're going to click on D1, 1D, and then we're going to click on the column price, click and drag to make it a bit smaller, and then we can get a bit more similar picture. We could as well place those lines similarly to the levels of support and resistance we see in here. At the moment, it's not mandatory, so I would like not to waste our time doing that. I'll explain briefly just the idea of how it works, and then in the practical part, we'll dig a bit deeper and understand how we can use it. But the idea in here, as you can see, that the resistance are levels at peak points with pivot that is mentioned in here. And the resistance, if this would have been my room as an example, so I would have my ceiling, my resistance, and I would have my ground, my floor. Just a second, guys, sorry. And I would have the I have my ceiling, and then I have my ground floor. I have the bottom here, and at the bottom will be my support, and at the top I'll have my resistance. The idea here is to capture a certain level that we think that if Nasdaq will break for some reason, either up or down, it could have something fundamental that took place. Could be an announcement, could be any economical change that has an effect. We're going to go through the economic calendar and use examples of how it can be done. But at the moment, I'm just shedding some light about a general idea. So resistance is at the top, support is at the bottom, and we can assume that if this level breaks, something fundamental might have happened. Now, based on those levels, based on the resistance and support, we have things called TP and SL, take profit and stop loss, which we saw in the beginning right here. Take profit and stop loss. These were ready for us. We didn't write any of those by ourselves. Now, if we'll select one of the scenarios, let's go with the buy for the time being, we will see that the take profit and the stop loss, which we saw from outside, are placed for us automatically. Of course, if I would like to modify any of them, or I would like, as an example, to modify the lot size as an example to increase the position, I can definitely do that. I need to also remember that if I increase the lot size, it can increase my profit or loss. Okay, this means the take profit and the stop loss. What it means is, you can see, preset the take profit to book potential profit when the market is moving in your favor. But in a simple interpretation, take profit closes the position automatically with a profit. Stop loss automatically stops the position with a loss. You don't have to remember what I just said. You can just point in here, but I'm giving it in simple words just for you to have it a little more easier to remember. Okay, so take profit, closing the position automatically with a profit. And what we said about the stop loss is closing the position automatically with a loss. When reaching the price, if it doesn't get to the price, it's just gonna hang there, okay? But if it gets to the price, that's what it does. Now, how is this helpful? This way, when I've got take profit and stop loss, I can go do my businesses and I don't have to be by the computer. This will act on its own. Okay, we can also automate the entry using execute when price hits, but at the moment it's a bit less relevant, so we're going to touch that very soon. As I said, guys, if you've got any questions until this point about anything that I said, feel free to fire away. Before we carry on, also I would like to show you what happens if we don't have the take profit and the stop loss. So we're going to use what we have got at the top, crude oil. We're going to click on view signal. We're going to again make sure that the validity, it looks right, no problem. And then we're going to go with one of the scenarios. Okay, but we've got a message here. The market has already reached a key level. Okay, well, no surprise. As you can see, let me switch quickly to okay. One more thing before I'll carry on. Just a general tip in trading. When you analyze, typically we analyze a certain time frame that we're used to, which is based on our strategy. If I'm a daily trader, it's common for me to see dailies and hourly time frames and weekly time frames, but I'm not going to just see one time frame. Would like to go between days, weeks, and hours just to have better proportions of how things are looking from the inside. For instance, if I saw the drop here and I'm looking at days and it doesn't appear, it might be in a smaller time frame. So in days, this will be my outside. This way, I take a step a little closer. As we can see, this is what we were looking for. 2 hours, we can see it even more significantly, and 1 hour, we can see it like this. So this is just a general tip. I don't want to confuse anyone. I'm just giving it as a side note. Okay, now. So what's happening here? Why can't we use the signal? That's because the market has already passed one of the levels that we anticipated, which makes this signal futile. And even if we'll try to click on the buy or sell, we're not going to get anything. Okay, so let's carry on. Like I said, if there are any questions, feel free to fire away. One more thing I would like to say about the signals in general is that the signals are not manufactured by AviTrade. They're manufactured by the third-party company, the Trading Central. Okay, now, everything that we saw in here is still under the umbrella of technical analysis. Okay, the resistance, support, and pivot, and numbers, all of that is under the same umbrella of technical analysis. So if we divide it to two types of analysis, okay, two types of analysis, we've got technical analysis and we've got fundamental analysis. Now, in technical analysis, okay, just a second. We're going to find averages, support and resistance, statistics, indicators. Okay. On the other end, we've got news, articles, we've got certain events, we've got earning seasons, and so on and so on. So this is fundamental and technical analysis. Now, it's very common that people tell me, Danny, I only do technical or fundamental, just one of them. But the point here is not to do one of them. The point here is to combine, because the technical analysis will be the how things are moving. Okay, so we'll look at the numbers and we do the, what the example, what we see in here. But if we don't know the reason, if we don't know what pushed the instrument over the resistance or support, so we cannot justify that and we cannot do the same level of analysis. Okay, so how do we get all of those things, the news and the articles and all of those? What we can do is just to go a little lower to the news section. In here, if we look at the pre-European market brief, we can see some nice article in here. And right here at the bottom, we have 4 related instruments: crude oil, gold, Bitcoin, and the Aussie. There are different categories in here for you guys to enjoy. Very easy to access. There are different topics in here. If you're more into companies or a specific article that you would like to review, there is also another section under the discovery, the market buzz. Market buzz is also divided to different categories. And what you can find in here, for instance, is if you're looking for an idea what to trade, what is now popular online that might be worth your attention, you can see that the bigger the bubble is, the bigger, the more mentions that it has. So we've got Open Door in the middle, we've got NVIDIA, we've got Google here, NEO. So if we'll click on Google as an example, on Alphabet, we're going to see different articles in here in the news feed. Now, if I would specifically, there is a lawsuit here. If, for instance, I would like to read about the lawsuit, understand a bit better, I can definitely use it like this, and then I'm more specific and I can get more information about it from here. Now, of course, this doesn't need to stop in here. I can go to Google. I can, keep taking it to the next level if I find it interesting and I would like to enhance my analysis. Not obligatory in any way. Again, just giving you here some tips. Can go back, select something else. Underneath in the discovery, we also have the economic calendar for a more official kind of statements. For instance, tomorrow we've got on Friday. On Friday, we've got the NFP, we've got a non-farming payroll. So I'll use it as an example to show you how the economic calendar works. There is another question here from Abdul Rahman Nadim. Abdul, you're asking, can you recommend a book to study all about trading in PDF? Ooh, okay. Well, I'm going to show you how to get to the Academy very easily from here, from our website. If you see in here at the end of the segment, this is, first of all, I'm replying to you so everyone else can see your question. Okay, so Abdul, as you can see right here, if you click here on tutorials under the education section, it opens right away tutorials for you for free. A physical book, I believe if it still exists, by Neil Rachel. There was a trading book when I started, was 2012. If it's still there, it's not a bad book to read. Other than that, there is a lot of content in our YouTube channel, and we also have the education section. Now, I hope it helps. Now, if we look at the economic calendar and the way that it's constructed, it's very straightforward. We've got here the question mark, which if we click it, we can get the explanation how to operate with the economic calendar. Then we've got the magnify to look for something specific. In here, we've got the calendar itself, which we can select what date to what date we're going to review. So I selected from the 3rd to the 10th. I've got this blue trail that shows me what dates are selected. I'm going to click here on the reset to go back to the default to show you guys how to filter it in your own way. And at the moment, it seems like, just a second. Okay, so by default, you're going to see everything. You don't necessarily want to see everything all the time. So let's suppose you're more into the dollar, okay, specifically the dollar. So I'm going to click here on the US flag. I'm also going to click on the Canadian flag for the CAD, and I'm also going to click on the Australia for the Aussie. Now I've only got Canada, Australia, and United States for the dollar, and that's what I'm going to see. For instance, I also want to filter the impact. Okay, we've got here a few parameters. We've got how strongly we think this will affect the market, what's the actual result, what's the forecast, and what's the previous. Result will only appear above the red line since those things already happen, and how can we possibly know the result of something that didn't happen? Yeah, this is why it's not here. So let's, for instance, suppose that we would like to only look at the major events. we've got here low and medium, but we want to filter out those high impact events. So I clicked here on high, and now we only see high impact events. Great. Now, if we carry on down, we've got the NFP. NFP, non-farming payroll. I'll click in here to get more information. I'll click in here on read more. Non-farm payroll is an employment report released monthly, usually on the first Friday of every month. Then we can understand a bit better that we can also combine the expectation that the interest rate will be lower with the upcoming CPI. And we can look at the non-farm payroll as one of the indicators of how the US economy is doing. So obviously, if we get more jobs applied, which is higher than the previous and the forecast, then it might be a sign for US economy to strengthen, which can implies that the interest rate will indeed go lower and the dollar can possibly rise. I don't want to confuse anyone. Again, I'm just shedding some light about the general idea. But this is a magnificent way to quickly get knowledgeable about things that are happening in the market. Also, another thing that I would like to show you guys, this is super cool thing. You can basically, because I understand everyone has their own things during the week, it's difficult to remember specifically when is the event to be by the computer, with a screen open and all of that. So what we can do is we can basically book this specific event into our calendar, and then we get a reminder on our phone before that, 5-10 minutes before that. You can set it whatever you want, and you can easily get prepared, open the screen. I think it's very good. Select whatever calendar you have. Okay, I think we're ready, guys. I believe that at this point, I think that we are ready to move to the practical part. As I said before, any questions or any requests until this point, feel free to fire away. Now, how are we going to select the instrument that we're going to work with today? One of the ways is to select it manually through the categories. We've got here Forex, majors, crosses. Underneath, we've got indices, cryptos, commodities, and stocks. At the moment, the US stocks are not available. Maybe one of the commodities can be a good candidate. We'll click here on metals, and we'll click here on, so let's see. This doesn't look too attractive. Maybe platinum. How is platinum doing? Let's switch to days. Okay, let's switch to weeks. Okay, all right. At this point, let's stay with that. You know what? Let's stay with that. Let's stay with that. We can definitely work with that. Okay, so we'll click here on the arrows, clean the drawing. Before we go ahead, we would like to first understand how we can align the chart in a way that makes sense to compose a position to get to where we want to be. So if we click buy or sell, we're going to open the order entry. If we go from left to right, in here we've got the time frames. This is actually a search bar. I can search what I want, then select it from the list. In here, we can change the way that it's aligned, if it's a line or candlesticks. In here, we've got the crosshair or no crosshair. With no crosshair by default, I get no data from the candles. With crosshair, I do get the number from the candles. In here, I can change to different layouts, have multiple charts on the same screen. And at the end, we've got here the indicators, which I can search, but I'm going to show you one anyway. And lastly, we've got all those nice lines which we can place on the chart and make the chart a little more visible for our analysis. Now, we spoke about support and resistance. So if I'll select the pivot points that I find right somehow in those levels, I can find. Okay, so there is a question here about scalping. Scalping, guys, is one of the techniques, one of the I promise you that I carry on in exactly 30 seconds, but this question, just a second. Okay, so we've got three main ways of trading. Those are not strategies, those are trading styles. So we've got scalping, we've got intraday daily, weekly, sorry, intraday and weekly. The way that I wrote it like this is because some may say that intraday is really 1 day, some may say that it's up to 2-3 days, and it could go up to a week. And we've got swing. Now swing is long-term trading. This is medium length, okay, medium term trading, you can put it like this. And we've got short time frame trading. So this could be minutes, this could be maybe minutes or hours, typically minutes. In here, this will be days up to a week, and in swing, we can even hold it for years. Scalping requires a lot of attention. We have to be on the chart. We cannot mainly use, typically I wouldn't use pending orders to do scalping because I have to open and close the positions right away. I would recommend scalping for someone that has a little bit of experience and knows how to analyze short time frames like 1 minute or 5 minutes. But today we're going to use the daily time frame. And as you can see, I've set some lines in here, and I'm also going to enable the execute when price hits, take profit, and stop loss. On top of what we wrote about the take profit and the stop loss, we're going to right here execute when price hits, which what it does is it's opening the position automatically when reaching the price. Now, this allows me to fully automate my position. I've got a price for that to close, a price for that, a price for that to close up with a profit, a price for that to close with a loss, and a price that it will open. Of course, we're going to modify all of them, but I wanted to enable them for you guys to see how to use them. Now, from this, at this point, what I want to know is if platinum seems to be going up or down. Okay, so if, for instance, I'm going to use here a trend line, and I'm going to try and measure the way that it was going bearish, we can definitely see that there was a decrease in almost 14%, right? This was approximately 2 months ago. If we just use here a timeline, we can see that this was on July, and we can see that we rose approximately half of that, a little less than half of that. So if I think about the same momentum and the way that it was increased, right, platinum, those are days, by the way. Each of those candles represent the day. This was yesterday, 2 days ago, 3 days ago, and the weekend. Okay, when you see a blank candle, blank, no data, it means that this is the weekend. Okay, now, if for instance, I'm looking at the chart and I see, okay, this was yesterday, this was 2 days ago, but it seems like platinum hasn't got to my center line. Also, the way that I put it here was this. This will be my resistance primarily. This will be my support again primarily. But we're gonna have center lines. This is the center from mid to support. This is my center from the current to the resistance. Now, I'm not always going to target the further lines. Maybe I'm going to target something in between to be more realistic with my ambition. If, for instance, the price is 1,415, okay, and I don't feel at the moment safe enough to buy. What I want to happen is I want platinum to get a little bit down, because then I can gain a little additional difference. And what I would like to do is I would like to take it. You see, if you're trying to get to a specific number, I was looking for 1385, but it seems like when I was trying to lend it, it doesn't let me do it, right? So an easier way to do this is to click in here, click on the white cogwheel, and then to specify what price you're looking for. I'm also going to paint it in white, and I'm going to click in here and change it to my entry price. On top of that, I am looking at the next level. The next level is 1463. I think that to place it exactly on that level might be a bit on the edge, but I'm pretty happy with 1445. So if it breaks the resistance, I'm afraid it might turn around. This is why I would like to close it. I want to get to it and I want it to close. Maybe I'll push it down a bit like this. Okay. Now, if for instance, and also the support line, let's keep it like this. Let's maybe push it a little higher, make it 1325. Okay. Now, if I would like it to be 1325, and I would like to use the same ratio of difference to my resistance. First of all, I would like to fix it like this, to be the same level that I wrote in here, and the take profit to be what we wrote, which is 1440. Okay, now we've got two different levels. We've got this, let's paint it in green. And this will paint in red. Okay, now we're gonna see how far are we from the entry. Okay, so we'll put here the name of the instrument, platinum, and then we're gonna put the values that we choose. So our entry is 1385. Our take profit is 1440 and stop loss is 1325. Now, to know how far away my targets are from the entry, all I gotta do is just to subtract the bigger number from the difference, which makes it 55. And my second one is, okay, we're gonna take that, paste it in here, and it seems like it's 60. Okay, great. $60 away. Now, what I would like to do now is I would like to ensure that those levels are levels that are happening in a reasonable time frame. Okay, even though we see that we were on those levels, just at least the take profit is something that we can maybe expect in the next couple of days. But what about the stop loss? This 1325, when was the last time that it was there? Let's see. It's been a while. It's been 2 weeks, right? A little less. Now, how can I validate that those levels are indeed levels that we can expect? One way is to do what we just did, to place the timelines and the lines to see how it interacts and to measure when was the last time that it's there and to maybe add statistic to it. Okay, another way is to look at the difference between the open and the close, the high and the lows. This way to say, yesterday the open was 1428, close was 1418. This means $10, and this is why I think that it can move $10 per day. The problem with that is because each candle is different, so to rely on one candle is not really an average. So we need to actually accumulate a lot of candles. For that, we're going to use an indicator. Click here on the indicator, click here on the type to filter, type here AVE for average true range. Click and drag it to the right. In here, we can simply select the length of how many candles we would like to withdraw our average from. So instead of doing this calculation for 14 candles, I can just set here 14 and click here save. And then it does that for me. So the average true range analyzes the differences in the past 14 days and gives me this number. So I see that the average movement per day is 31, but we were looking for what? For 55. This means on statistic pace, I could expect maybe 1 to 2 days. But now things are becoming a little messy. So I would like to put those ingredients to help me construct the position with a bit more logic. I'm going to write TTMU, target time, movements, and units. My target in this case is going to be $500. The time, I think, reasonable from what we saw on average, if the average ATR, okay, and the expected movement, as we said, is 55 to profits. So statistically, if we're looking for 55, I would typically say can take up to 2 to 3 days. It might even turn around. It might even take a year. But with this indicator, we know that if the movement, average movement per day is 31, it's realistic to expect. There is a question here. You should contact your account manager, Elijah. You should contact your account manager. He can easily assist you with that. Okay, now if we're looking at the numbers we wrote and at the numbers that we set as our target, 500, and we understand that this could take up 2 to 3 days, I'm pretty happy with that. Why did I want to think about a time that it will take? Because if, for instance, I would target the next resistance, 1510, when was the last time that it was there? July. Okay, well, July was 2 months ago. Am I going to wait until it will get to this level? Another 2 months? No, sir. This is why it's important for me to know how much approximately I'm planning to keep this position open. If it gets there, great. If it doesn't get there at the time that I expected, maybe I will choose to do something else with it. Now, the unit is the next step. We can see that we are very close to where we wanted to be, but we're still not at 500. Now, the logic, let's set it to 0.01. Now, the logic here, when I've got only one unit, because I'm $55 away, for every unit that I acquire, every dollar on the chart is giving me $1. But for every dollar that I'm losing, I'm also going to lose $1. So if I'm going to click here on the plus, click and increase, we can see that now it increases accordingly. And I can click and click and click until I get to 10. And with 10, we have 550 and 600. How did I know that? Well, we can also use a simple equation. What is this simple equation? Target divided by movements equals units. So 500 divided by the movements we are looking for equals 10. Okay, super simple and straightforward. There is really nothing crazy to it. What I'm showing you now is quite procedural, and you can use it for any other instrument as well. There is a question from Nura. Nura, what strategy is that you are using for the analysis? At the moment, support and resistance and ATR for. Okay, so this is just the basic thing that we did now. We didn't do anything as an addition. We didn't check the fundamentals or anything like that. But with these things in mind, I have to delete it, guys. With these things in mind, just look how much progress we've made. Oh, one more thing. It's also important to know that I don't always want to keep my ratio 1-to-1 or 1-to-1-1. What does that mean? At the moment, we can make or lose quite similar amount. So if I'm going to open another couple of positions with the same ratio, I might lose or gain the same amount. But sometimes I want to have a better ratio, a different ratio of 1-to-2 or 1-to-3. In this case, if I've got a ratio of, let's suppose, let's do it like this. There we go. 5.5% of my balance. Now this is a little more advanced. It's a little more advanced, but I really want to give you something useful, guys, for you to to make progress. And this is one of the things. Now, why would I want to know 5%, 5.5%, 6%? Who care what percent this is of my balance? Because I'm not always only going to take this position with platinum. I'm going to take another position with something else, another few positions with something else. So this 6% will be multiplied. Now, if one position, I've got this ratio here, and I would like this ratio to be, let's suppose 1 to 2 is an example. So I would like this 6% to become 3%. How can I do it? Can anyone share with me? Questions about participant? I've replied. I don't know why it doesn't appear. So anyone has any idea? How can I set the 6% to be 3? What needs to happen in order for us to see 3%, $300 instead of $600? What can be done in here, guys? Anyone has any idea? Okay, to change the lot size. This is Isaiah. This is a good idea, but watch what will happen if I'll do that. Okay, if I do that, let's suppose that I've done that. Now my profit is it changes my profit as well. Okay, so I could do this. Okay, change the lot size, but another alternative is to get the stop loss closer onto the entry. And if I do this, for instance, if I'll cut this 50 by half, okay, this $50 away, if I'll take them by half, so let's do it together. So stop loss instead of being here, oh, sorry, then we get our entry, then we get half of the loss. And a very easy way to know your percentage out of a certain number, the number out of your balance, is to go possible loss, possible profit or loss divided by balance equals factor, and then to go factor times 100 equals percentage of balance. Okay, the way that it works is if we go 300 divided by 10,000 equals 0.03, and then times 100 equals 3, right? 3%. So if we got 5%, 5.5 for profits, and 3% for, 300. Okay, this means that our ratio is nearly 1 to 2. So if we open two positions like this, one position make profits, the other one have losses, then and we make profits on both of the positions, it means that for every two positions that we've made profits, we can compensate. For every one position we've made profits, we can compensate two positions that we have losses. This is ratio only. And what I've explained, these things are procedural, and you can try them out with different instruments to have a nice, healthy diversification. One last thing that we're going to do before we say goodbye is to ensure that we have the ability to take this position. As we can see, 1 ounce of platinum costs $1,420. This is the price per unit. Price per unit equals 1420. Number of units that we acquire is 10. Therefore, if we go price per unit times number of units equals value, And this value in this particular case is already written for us, which is 14,000, right? 14,200. Okay, that's the value. Underneath, we see something called leverage. Leverage 1 to 10. What is the leverage doing? Who knows? Multiplies buying and selling. Okay, the way that it works is because we've got a multiplier that multiplies us by 10, then it means we can just divide a value by the leverage. And then we know how much money we need, okay? So if we go value divided by leverage equals margin impact. And margin impact, guys, is the true necessary amount to open the position. Okay, and it's not the value. It's not the value that we need. What we need is just the margin impact, which in this particular case will represent 10% of the value. Guys, even though we only have 2 minutes left, if there are any questions about any of the things that we've done through the process, feel free to fire away. I'm happy to explain. This is the moment. This is the moment. We still have another minute or two. I'm happy to explain a little bit about the analysis or whatever, guys, you want to know. Any questions? Okay, so the question from Frank is, why did you pull down the green line? Which green? Let's see. Why did I pull down? Okay, you mean, this is probably what you mean. Why did I pull it down? The reason that I pulled it down, Frank, is because, as you can see, as I have explained, we're looking at days. We're looking at days. Opening two positions. Abdul, I'll explain about it in a moment. But Frank, you see that we were there yesterday and 2 days ago. We were there. So this gives me some legitimacy to think that if I'll target a little higher, it might not get there and turn around. And this will make me wait longer until it will get there. And this is why I pulled it down. Okay, I hope it makes sense. Okay, now what Abdullah is asking here for opening two positions. So what I've explained about the ratio here. Let's look at the ratio here. Okay, we're going to try and do it quick as much as we can. Position A. Okay, so I'm just taking the ratio. It doesn't matter what instrument we're using here, but I would like to just to break it down for you to know how it works. Just a second. A, B, and C. Okay, with this ratio, the accumulation of the numbers we've got in here, this is only profit. This is if we've made profit on all of the positions. This is if we have losses on all of the positions. Okay? If we would work with the initial ratio, this would have looked like this. Okay, versus this is before we've made the adjustment. So if we lose on all of the positions, 1,800, it's even more than the profits. Now let's look at what happens if we gain on some of them profits and some of them are losses. Okay, so if two positions are making profits, if one position is making profit, it's 550, and then two positions are having losses, right? So one position profit, two positions having losses. Then we'll have 550 that we've made versus 300 and 300 that's 600. We almost compensate the whole amount that we've made because of this ratio. Okay. Of course, the bigger the ratio is, the better we can balance our diversification. Unfortunately, guys, we don't have a lot of time to discuss this. I hope, Abdul, that my explanation made sense. Nura, you've got another question here, even though we don't have any time. Could we use TradingView for this? Yes, of course. Of course. You can combine another screen, use whatever you like. Guys, unfortunately, I have to say goodbye for today. I'm very happy that people here learn these practical things, and I really hope that it will, it will help you make progress. You're all welcome to join us with tomorrow's live Q&A to join us and ask the question. Until then, I wish you all best of luck with trading. Have a fruitful week and have a nice day.